depending on how you like your burgers. Hopefully you like nothing burgers, because that's what we got. We got nothing.
Hey there, everyone. Jamie with
Hey there.
Sell for 1%, joined by the gang. We know they have come out yesterday and told us interest rates for mortgages will not change. Is that correct, Rich? What insight do you have for the market?
That
Very
is
insightful. It's a very
that is a
insightful question.
that's
So
a
I'm trying to lay a foundation here. Rich, give us the
Okay.
foundation.
Like a good attorney.
well, that is exactly the case, depending on how you like your burgers. Hopefully you like nothing burgers, because that's what we got. We got nothing. And they are talking about, like, they aren't giving any indication that there's going to be a September rate decrease either. It's all data dependent. They're going to keep an eye on things, and of course, Trump thinks, well, the data justifies it. We have a growing economy, we have a good jobs number, and inflation is down, and interest rates are hurting the housing market. And he rightly points out that, I don't know what the number was, like $800 billion a year that we pay in extra interest for every point that is held up. When I say we, I mean the federal government on the national debt, which is, I think, like 34 trillion,
Yeah.
something like that.
Yep.
So these interest rates don't only affect homeowners, they affect old Uncle Sam too, because he's paying billions of dollars a year. I think it's a trillion a year in interest. Is that right? Every year we add like $1 trillion just in interest to our debt. So lower rates would help everybody, but Uncle Jerry is not ready to do that, and Uncle Donnie is getting a little bit upset about the whole thing.
Yeah, Trump's truth that he posted. Jerome Too Late Pal has done it again. He is too late in all capitals, and actually too angry, too stupid, and too political to have the job of Fed chair. He is costing our country trillions of dollars, in addition to one of the most incompetent or corrupt renovations of a building in the history of construction. Put another way, Too Late is a total loser, and our country is paying the price.
And
Well,
tomorrow he'll tell you how he really thinks.
I expect that Mr. Trump is going to be cutting off that new Fed building here very quickly. The thing, I did watch a little bit of Uncle Jerry's presser. It seemed like to me, and you guys, I don't know if you guys watch it or not, I'm sure you did, Rich, but it seemed like to me that Jerome was struggling with reading his prepared notes because he doesn't really believe it. I mean, that's kind of the feeling I got.
Yeah, I'm sorry I didn't catch it this time. I usually do, but I had an event that I was at, so I missed it this time. But I wouldn't doubt that. I mean, I think it's just a contrived situation at this point. Who knows where we're headed? But I hope you like your rates at around 6.5 to 6.75, because that's kind of where we are right now.
Yeah,
Yeah,
For
Rich,
mortgages.
your interesting point, you know, about the interest on the debt starting to become something that is an issue to pay back is, to me, in Columbus, Ohio, not on the Hill, not a politician. How are you not ripping your hair out, setting on fire, telling people this is like that is, to me, that's insane.
well, you
Uh,
can't just lower rates because of that. I mean, you'll I don't want to
sure,
argue on the
sure,
video call,
and
but
I
you'll
don't,
harpoon the entire economy
right,
and cause in big time inflation if you just cut rates
right.
to zero because of all the past mistakes. It Yeah, with what he was saying, I didn't watch it, but I read, and listened to some different analysis on it. It's like the goalposts are now shifting
Right.
because now the reason is not because of tariffs and the employment isn't that bad because there's no immigrants coming. I mean,
Right.
that's literally the reason why we're not going to reduce rates because there's less workers looking for jobs. It's not really because employment is suffering or payroll's decreasing. It's just because not enough immigrants. And I mean, that seems like a pretty direct shot at Trump too. That they're doing this big,
measuring contests back and forth with each other, and
Right.
he's
Over
going to
H-1B
be he'll be
visas.
out, and that Waller will be
It
the
was
next.
for me. It was a lot of what ifs. What if this happens in the future? What if this?
Yes, and that's why they should be at neutral policy.
There's a difference between, and I'd ask you just watch a few minutes of it because you and I can read that script differently, but when you actually watch him reading it, like I said, it seemed like to me he was struggling that I don't really believe this, but this is what's been put in front of me, and I need to read this. And I just had especially when I saw a report yesterday, and I'll have to dig it out, that, and I apologize, don't remember, but I remember in the article, it said the housing segment of the financials of the United States is officially in a recession.
It's been that way for a minute, yeah.
Yeah, and it was just like when you see that, and we obviously are all in this business. I mean, our business is good, and I think that we're a little different than most real estate agents because of our 1% model. We're busy. The overall, when you look at the Columbus realtor numbers, the national numbers, things are slow and people just are not selling. And Rich, you're in the business for a long time now, and you're seeing mortgages slow because of these interest rates, but everything around me tells me that the economy's in decent shape. I don't know. Something seems off with that presser yesterday, for me at least.
Yeah, the economy does seem to be in good shape. So I guess that would be one reason that we don't really need lower rates, but I don't think it translates, as you said, over to the housing market. I think there's pockets of strength in the housing market, Columbus, Ohio being one of them, but nationwide, we are seeing a pronounced slowdown. My people in Florida tell me that things are really bad in the west coast of Florida.
The housing
Yeah.
permits, and there's a lot. The housing wire economists talk about been about a year and a half to 2 years that the housing's been in a recession. We kind of chug along here and do our thing, keep our head down and keep going. It's definitely, you can feel it. I mean, you can definitely feel the shift happening
Yeah.
in real time. And like those Altos numbers that I read off every week. I mean, the days on market, I got two different segments that are over 40 days now. And, if you've been following this, I mean, typically they're in the 20s. And so you're starting to see days on market skew up and things take longer to sell. It's very interesting to watch. It's not 2008 though.
No.
It's not unwinding. It's nothing crazy, but feel it and you can
Well,
see it.
what I see in dealing with people every day is they look at a house they like, and whatever you want to say the price is it 400? Is it 700? Is it a million? Is it 1.2 million? In whatever market they happen to be at a price point for, they aren't concerned about the price of the house, but they are concerned about what the monthly payment is, which is a product of the interest rate. So when you get into these high-end houses, what you have is back in the early 2000s, people were buying high-end houses with minimum amount of down payment and financing it that way. You don't see very many 1.2 million purchases now and 5, 10%, 15% down. Everybody is putting a large down payment. Like people who are buying these 1.2 million, 1.5 million houses, they're putting seven, $800,000 down from a prior home that they've owned or a gift from a parent or something. So, where I'm, closing a loan for a 1.5 purchase, the loan amount is only 400,000 because of the huge down payment. And the people don't have that huge down payment are not buying that expensive home
Wish my
because of the
dad would
payment.
give me a gift like that.
I was just going
Well,
to say, don't expect that, boys.
we're all
It
doing
just,
okay.
yeah,
And
it just,
I'm looking at the short sale statistics here, and in Ohio lacks accessibility for short sale specific metrics. But Florida doesn't, and they said, in short sale volume and prices, there's a meaningful drop in June 2025 compared to last year. But Ohio doesn't have exact short sale breakdowns and year-over-year trends to disclose publicly, which I think is interesting. because I think I think the short sales could tell you a tale of the tape. I have had two buyers interested in short sales in the past, few months. One of them is an investor that said, I used to do this all the time, and if they're coming back, I want to see them. Because we know that you can get a decent deal potentially on a short sale, but they haven't been coming back. As in, if they come back in numbers, I think that is an indication of a recessing home market.
Well, the big problem that you have there is that versus 2008, when we started the financial crisis, people just have a lot more equity in their home. And so you're not going to see
Having to do a
foreclosures
short sale, right?
and or short sales because, yeah, I mean, short sales, basically you're selling the home for less than what you owe on the home. And in 2012, the bottom of the foreclosure crisis, the average sales price here in Columbus had dropped to about $155,000. Last month, 380,000 was the average sales price. So,
Wow.
yeah. So
Right.
in
Yeah,
13
that's
years, we've more than doubled home value. So I don't see the short sale market making a big comeback.
Maybe in the
anecdotally,
next few
I have
years.
two sellers right now that are going to be selling for less than what they owe on. I mean, they're not doing true short sales. They're going to just bring money to the table. But those are both people that bought last year.
Right.
That then, for different reasons, had a financial change or had to move away for a job. They overpaid, or the market's not quite there for the house. So the only other thing about that, trying to chase those metrics down, same thing with foreclosures. There's like one HUD for sale in all of Ohio right now. I was looking the other day.
That crazy.
So I mean, it is crazy. Any type of increase, it's going to look like it's a tsunami
doubled.
coming.
There's two.
Right.
It
Because
doubled.
Yeah.
Oh my God.
because it's
Up
so low.
100%.
Exactly.
Yeah, that's
Exactly.
about it.
And
Yeah.
we see the same thing, it's like if we have a big increase in number of homes that sold and it's spun as 200% increase, well, it's because not that many homes were selling.
Right.
So it's interesting,
That makes sense.
there's a lot of different ways to look at this stuff.
No, you're exactly right, because last year interest rates were at 8%, and home prices have not increased that much. I think we're up 4 or 5% over last year. And so if you do increase by 200 or 300 units, is it because interest rates went from 8% to 6.5%? I mean, take it another
Right.
1.5%, take it down to 5%, and I think you'll see an explosion of homes being sold.
I think if rates were 5.75 instead of 6.75, that you would see that.
It's a mental thing.
And honestly, Rich saying the payment thing. I mean, that would
That's
be
a
nice.
whole percent.
There's
Yeah, but that's not a big number, on a $500,000 house. What are you going to save?
Sure.
A couple $100 a month? I mean, that's not a big savings, but I think it's more of that mental thing. We see it all the time. We drop below 7%, we saw a little surge. I think it gets below 6%. I think you'll see a pretty good surge of people wanting to buy because I think there's just people sitting on the sidelines.
We're in Columbus, we're at 5,392 active listings and coming soons. So we're pushing up to 5,400. And when I was listing homes and coming out of winter, early spring, I mean, this number I feel like it was under 3,000.
At the
Maybe I'm
beginning of the
wrong.
year?
Yeah, beginning of the year.
Yeah, that we were right around
inventory-
3,200. We were around 3,200 in
That's
March.
quite an increase.
Yeah.
Well, and I work a lot with buyers and, getting in a lot more to the listing side of things. I'm noticing, I have more leads, more listing leads. The thought is, everybody in the market does, right? There's 5,400 listings, but mine are selling. So.
Well, I tell people all the time, say, you guys are not hiring me to give you pie in the sky. You're hiring me to give you good, sound advice, and I'll look you in the eyeball and I'll tell you exactly what I think. And then if you want to do something different, that's fine. In the perfect situation, we may find the perfect buyer for this property at your price, but here's the honest assessment. And that goes a long ways towards helping people get their home sold. Because Jay mentioned that right now it seems like with those 2 short sales that you got going, not technically short sales, but they're selling for less than what they owe, that they want to be able to maximize dollars. But at the same time, if you're moving to Dallas for a new job, you don't want 2 house payments either, because you're just losing
Right.
them.
And that's why we're here, to advise. So give us a call. Numbers on the screen. Sell for 1% realtors. If you need to sell a house, call JB Barlow Bad Boy over here. If you need some advice, you got 5 minutes on the phone with Dave free. Just say coupon code Jamie.
Yeah.
And Rich Sircone at Equitable Mortgage. Thanks, Rich. We appreciate you.
Thanks for having me.
Yeah, every week coming on here and helping us discern the madness. Well, thank you guys. We'll see you next week.